Hey guys, my name is Brian. I'm a six-figure trader with BK Trading Academy, owner and educator along with my wife. And I want to show you the power of supply and demand and how you can enter these positions making top profit. In order to do so, I want to show you just the anatomy of an uptrend, downtrend, our support resistance zones, and the difference between supply, demand, support and resistance, and how we can profit, guys. You're in for a treat. This is beginner friendly. Don't forget to thumbs up this video if this is something that is beneficial to you and you learned something. I can't wait to dive into it. Let's get into it.
Yeah, I know I got problems, and I don't know where to go.
All right, guys, so let's talk about the anatomy of a trend, okay? I want to give you a few steps to follow. The first step is to identify trending structure. Is it up, down, or sideways? You have sideways trends, which is also called a range or consolidation. So once you go to a chart, you want to see if you're in an uptrend or downtrend, or if it's trending sideways, because it's going to show you what you should do next. If you should sell, buy, or wait. Okay, it's least riskier to buy in an uptrend than to sell in an uptrend, and it's least riskier to sell in a downtrend than to buy. I'll show you in just a moment. Number two, we identify swing points, your higher highs and higher lows in an uptrend. All right, we see price rise up, and I'm going to show you these circles here. This is our low, our high, our higher low, and this is called a higher low because it's higher than this low. This is a higher high because it's higher than this high. And then we continue that sequence, higher low, higher high, higher low, higher high. Now in a downtrend, it's the reverse. We're identifying swing points for a downtrend. This time we're going to say lower highs and lower lows. So notice we're in a downtrend. This is my trend line. Here is our high, our low, our lower high because it's lower than this high. This is our lower low because it's lower than this low. And then we continue this sequence of lower highs, lower lows, lower highs, and lower lows. Now, let's look at Cash Chef again for this uptrend. Now, step three, identifying major levels of support and resistance. These are reversal zones. And I like to sometimes call these pivot points. Oftentimes, when you go to a higher time frame like the daily or weekly, I want you to look at pivot points. So before we get there, let me show you what I'm talking about here. Notice on the left, we have a number of rejections here. And I can draw a straight line across, and this will show us that this is a key level of resistance. This is different than supply, and I'll show you in a moment. Now look at the bottom. Number of times that prices bounced here at the bottom, this will be called our support zone. I can draw a straight line across, that is support. So this is how price becomes predictable within our trend, okay? This will be considered our low that I showed you, and this is the beginning of an uptrend. Notice how price breaks to the upside and it stops here at this reversal point. I can draw a line straight across and notice how those candles are wicking right at that resistance zone. This is where price is bouncing down and it makes it more predictable when to sell if you want to counter trend trade. Price drops, pivots. This will be our support zone. Remember, pivot points are key. Pivot points is when price stop and abruptly turn the other way. Stop, abruptly turn the other way. And eventually in an uptrend is going to break through. This is why I say it's a lot less riskier to buy in an uptrend because eventually price is going to break through. And sometimes it's hard to tell when it's going to happen. So I'd rather you buy at support levels in an uptrend. Same thing here. Price came here, stopped, abruptly dropped. Here's our pivot point here, abruptly. And I can draw a straight line right across here where our previous red line was at. And notice right here, this is our pivot point. And guess what? That red line becomes our green line. In other words, our previous resistance becomes our future support. Or I can say, in other words, our previous ceiling equals our future floor. This is called a break and retest. A break and retest simply means when price breaks above the resistance zone or above our ceiling, come back and retest our floor, aka support. I can draw a straight line where our ceiling was to now our future floor. And notice how price pivots at those zones. Pivot right here, break higher, come back, retest. I can draw a straight line across. Our previous ceiling, aka our pivot point, equals our future floor, which is also another pivot point. So let me show you this here. This is a supply level here. And notice the supply is all the way at the top. Our demand is all the way at the bottom. I'm on the monthly chart. So this is a huge graph here, all the way back from 1985 on the left side here. And all the way on the right, this is 2000 13. So key zone, guys, this is highly important. Let me show you what I mean. Notice how price dropped. This is a few thousands of pip. Remember, I'm on the monthly chart. I would say at least 3,000 pips or so, and have taken months and months for a price to get here. Now, notice this area right here. This is consolidation. This is oftentimes where we can predict when price is going to drop, go up, drop, and go up. Notice that consolidation here. And then price rises. This is our demand level. So the difference between demand is that you buy just like you will at support. However, it's usually when there is reversal areas. So a complete trend reversal. Supply is all the way at the top. It mimics resistance, except supply is on a higher time frame and it is a trend reversal zone. Notice these yellow lines here when price reversed and dropped abruptly multiple times. And again, this is the monthly time frame. So this drop here comes down to this zone is at least a few thousand pips, so on and so forth. Now, let's focus in on this consolidation zone right here. Remember, we're at demand now. Okay, this is where we're at right here. We just zoomed in. This is our consolidation. We know that we are starting an uptrend because on the higher time frame, on that monthly time frame, we identified our demand zone. So we can see how price is bouncing up and down. And if this was me, I would only buy at every time it hits our demand zone or support level, because eventually it will break out to the upside, come down, and do something like this. Now, notice how price is going up and down. And I want you to get used to finding these pivot points. That will help you draw a line straight across. That will be your resistance, and your floor will be support. And I'm only doing it at these pivot points. So if you go to a higher time frame like the daily, weekly, or monthly, find these pivot points. Now, here's a pivot point all the way here at the top, our supply. Here's a pivot point all the way here at the bottom, demand. This here, our demand is at the higher time frame where a trend reversal starts. So our demand is when an uptrend first begins. Supply is when a downtrend first begins. Our support levels are within our supply and demand levels. Our resistance levels is within our supply and demand levels. So it's housed inside our supply and demand level. But whenever you find a supply and demand level, it is a trend reversal. And this here, my friend, is how I was able to retire from my 9-to-5 job. Only trading supply and demand levels, the easiest way to trade. This is where we come with the strategy B-swing from. Hey guys, if you're enjoying this video, do me a favor. Don't forget to thumbs up, like, subscribe, and share this video for someone who may be struggling or just new to trading and want to understand the basics of how to trade. I'm owner of BK Trading Academy. It is a global academy, meaning that we have people from all over, and we love helping people learn how to trade and make money. If you know that there's money to be made in trading, we take priority over risk management. You don't have to suffer in silence anymore. Join our academy, and if not, just watch our YouTube videos for free. Subscribe to our Telegram and our TikTok. Everything is in the description below, and thank you so much for watching our video. Now back to your video. Let's go. Price breaks out, comes down, retest. So our previous ceiling equals our future floor. When the price comes here, buy. Don't question it, okay? Now, the only time you will question it is if we have high impact news or unexpected high impact news. That's fundamentals. But for now, if you're looking at price action and basic structure, this is the key. This is the rules. So when you're entering a trade, you want to be confident. This is why we tell our students to journal our trades and make sure that each and every rule is met before you enter a trade. Notice here, pivot points, price came here, dropped, pivot. Again, price rejected from here and pivoted. Here's another pivot, it broke, came down, retest. So our previous ceiling becomes our future floor. And then price does the same thing. So notice how price equals our pivot points, breaks to the upside and come down to retest. Hit our supply, and then we're in a trend reversal. Now, I want to show you guys the power of pivot points, because pivot points, oftentimes people have different patterns. They're talking about double tops, double bottoms, head and shoulders, bull flags. They talk about symmetrical triangles, ascending triangles, and that's good to know. But if you can identify your pivot points, that's all the same thing. So for example, remember I showed you our resistance zone here, our support zone here, because of these pivot points touching multiple times. It's the same here as a bull flag pattern. So for example, price shoots to the upside. Here's our flag pattern. This is a bull flag pattern. It's the same, the very same thing. So if you identify your pivot points, you'll often find all of these other continuation and reversal patterns. Break higher, that's our break and retest. Here's our flag pattern. The very same thing. This is our resistance zone. This is our support zone. The beginning of the flag pattern starts at the resistance. The end begins at the support zone. Price breaks, comes down, retest. Here's our flag pattern. Again, break, and then comes down, retest, and then ultimately we start a downtrend. That's the cycle of trading. If you can understand the cycle of trading and where you're at amongst this entire cycle, you can predict where price is going to go. Now let's focus on our demand levels again, guys. Again, here's our demand level here. We identified our pivot point. I'm on the monthly time frame. Notice this circle here, and then it took years and years before it to come back. Notice this huge upside. This is a trend reversal. This is a few thousand pips. Notice on the right side, a few thousand pips. And it's not accidental that price came back at the same level. I can draw a line straight across, and it was a trend reversal, the same thing. So look at this green circle here and look at this gap. This is called imbalance. The greater the distance and lower the demand level, the greater the chance of the reversal and the higher our trend reversal will happen. So what do I mean by this? When price was last here back in 1985, it took so many years, 2010, right? It took that many years for a price to come back. I'm buying absolutely. Why? Because supply and demand works. Demand means that a lot of people want something. Price is discounted, it's cheap. Price is going to reverse. This is our reversal. So I would trade this for weeks and sometimes months headed to the upside. And it was easy. I didn't have to look at it every single moment. When I was working my 9 to 5 job, when I was busy, I would hold it oftentimes. Now, this doesn't happen often. However, you have a lot of pairs, you have a lot of stocks, you have a lot of options and cryptocurrencies and metals that are usually at demand levels. You don't have to trade the same thing all the time, but I would just scout through all of these assets that you can trade and look for our demand levels. The same as supply, but let's break down this demand level a little bit more. Okay, there's more than just this demand level here, right? Remember, demand levels are pivots that causes trend reversals. Let's spot this out here. Here's one. Look at that. That is at least 500 to 600 pips. Here's another right next to it, at least 500 to 600 pips. And then another one that went slightly below it. But notice here, guys, this trend reversal. And again, remember, I'm on a monthly time frame. So 500 to 600 pips, maybe 700 pips or so is huge. I can draw a straight line across, and it's not accidental that price does that. That is a discount. So the big banks and institutions love this. They're in it for profit as well. And if you ride on their coattails and identify where you're at amongst this large chart, you can profit just like this 9 times out of 10. All right, guys. So now I'm looking at the stock Procter & Gamble. It's traded on the New York Stock Exchange. Okay. Procter & Gamble, a lot of people know what Procter & Gamble is. I'm sure you have a Procter & Gamble household item in your home somewhere. All right. So that being said, remember the power of supply and demand. I'm on the weekly time frame. And if you ever get lost, you can look at my background here. I'm trading Procter & Gamble. That's PG. And I'm on the weekly time frame, 1 week. That means every one candle equals a week of data. Okay. So that being said, I'm on the weekly time frame. And notice this here. I'm going to mark my supply levels. Remember, pivot points. So I'm going to circle it to make it easy for you to see. One here, one slightly higher, and around this zone here. So all I have to do is draw a straight line across. So I know if price comes back to the zone 9 times out of 10, we're going to hit a reversal level like this here. Okay, we're going to hit a reversal level. So, all right, so that's supply. I'm going to mark this as supply. All right. However, price is way down here. So this here, this supply zone is irrelevant to me right now. I'm not worried about that. I just need to know where am I at amongst all of this here. Now, remember, we talked about supply and demand, and we also talked about support and resistance. So I can see that we're making lower highs, lower lows, lower highs, lower lows, right? And you want to sell at your lower highs and profit at your lower lows. However, every trend must come to an end. And this is what I was talking about, spotting your demand zone. So let's look left for clues. You want to also find your pivot points. Here's a pivot point right here. First off, let's look where current price is at. If I look straight across, here's a pivot point, here's a pivot point, and here's a pivot point. So what I'm going to do is just draw a straight line across, just like this. And I can draw it all the way across to where price is currently at. Now, this wasn't necessarily trend reversals on the weekly, but on the daily it was. So let's get my measuring tool. So from this pivot point to where it stopped here, that was about a 12% rise. From the second one to here, about an 8% rise. And then this one from here all the way up to supply, that was about a 26% rise. So this is significant enough for me to enter, at least temporarily. So this will be my demand zone here. Now, remember I said the imbalance from when price was last here all the way to current price? And look at this gap here. So look at this from when price was last here. This was December 2023, right? And today we're in December 2025. That is over 2 years ago. Prior to that, this was October 2023. And then this last touch was June 2023. This is significant enough. This is all I would trade, guys. So for Procter & Gamble, I would anticipate price to rise at this point. Okay. However, before we enter, we want to find some sort of wick rejection. We want to look at if buyers are in. So at this particular time on the weekly time frame, we do see a little bit of wick rejection, but it is not strong enough. Let's go to the daily time frame. Now that I know that I possibly want to buy here, now I can start drilling down. Now I'm on the daily time frame. You can see in my background, Procter & Gamble 1D, which is daily. We can see how sellers have stepped in right into our red zone. So anywhere within this red zone is free game. Okay, so if it drops a little further, I'm still good to go. But ultimately, I want to see a wick rejection where buyers come in. Okay, and so even if this is not a trend reversal and this was just a pullback, we still need a pullback to attract more sellers. Remember, the ingredients for a downtrend is that we have lower highs, lower lows, lower highs, lower lows, lower highs. We're coming to a lower low. What is next? Lower high. So even if we get a lower high, we could still buy at the zone, even if it begins to do a lower low. We'll take profit before it starts to drop. However, this could be a trend reversal because we're at a significant demand zone. So if I scroll back out to the left and I can see where our previous resistance was from when price pivoted off this level, I can say maybe 8 times out of 10, give or take, that price will come back to around this zone. So that's how I would trade all the time. Now, I wouldn't put all of my money on this entry. I would buy a few shares, and as price rise, I would pay myself, which is called partial payment. So if this is my take profit zone, which could take maybe weeks to do, let's put T for take profit, right? And if this is my level that I ultimately want to take profit, this is how I would trade it. I would buy here, and as price rise, you're going to have some pullbacks, right? This is where you will pay yourself so that you're guaranteed profits while you're holding some runners. You're going to have some pullbacks, and ultimately we want to see price continue to do something like this. So every single time when price rises, right before it pulls back, you want to pay yourself, okay? You can even put in some more shares at support, pay yourself. More shares at support, and then ultimately you want to take profit and pay yourself ultimately, because we looked left for clues and found these same pivot points and these same buy levels. History repeats itself, guys. This is very simple, beginner friendly. Guys, if this made sense, give me a thumbs up. Let me know that you care what we're giving you, if this made sense. Guys, I haven't used a single indicator. Okay, comment below if this made sense, if you have questions as well, and if you plan on doing this on your next analysis. And guys, remember, all you have to do is go to the higher time frame. It could be the daily, it could be the weekly, and you want to find your pivot points, and you want to find out where are you at amongst this entire chart. If you can find where you're at, you can begin to know exactly when to buy or when to sell. Okay, I know that I am at a demand level on the weekly time frame. I know that we had trend reversals multiple times in the past, right here, 1, 2, and then ultimately 3. So now that years pass and we're back at the zone, I'm looking to buy, and I can take profit back to where our previous resistance was, where it can take weeks or months to do, and just pay myself as it rises, or I can just exit way before then. As long as you're profiting, you're good to go. All right, guys, I will see you in the next video. Comment below, thumbs up, share this video for people who are looking to learn the basics of trading. I will see you in the next video. God bless you.
Oh, she said.